Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Wealthfront Corporation quarterly report. Wealthfront Corporation offers a wide range of services to various clients. The company primarily caters to individuals, providing them with investment management solutions. In addition to individual clients, Wealthfront also serves high net worth individuals who require more sophisticated financial planning and investment strategies. The firm's services extend beyond individual clients, as it also provides its expertise to charitable organizations and corporations. This demonstrates the company's ability to adapt to different client needs and provide tailored solutions. Wealthfront invests in a variety of assets, including public equity and fixed income funds. The company also invests in mutual funds and exchange-traded funds, ETFs. To make informed investment decisions, Wealthfront conducts its own in-house research, allowing the firm to stay ahead of market trends and capitalize on opportunities. Overall, Wealthfront Corporation's diverse range of services and investments positions it as a comprehensive financial solutions provider. Der Aktienkurs von Wealthfront Corp. ist in den letzten 12 Monaten über 33,73% gesunken. Drei wichtige Ereignis haben dazu beigetragen. Die schlechte Performance nach dem Börsengang, IPO, im December 2025, die Nettoabfluss von Einlagen im ersten Quartal 2026 und der potenzielle Interessenkonflikt des CEO bei dem Immobilienkreditgeschäft. Die schlechte Performance nach dem IPO hat den Kurs etwa 371% auf $880 pro Aktie gesenkt. Die Nettoabfluss von Einlagen im ersten Quartal 2026 haben den Kurs weiter gefährdet und führten zu einem Rückgang von fast 17%. Der potenzielle Interessenkonflikt des CEO bei dem Immobilienkreditgeschäft hat Bedenken aufkommen lassen, der persönlich einen Anteil von 951% im Geschäft besitzt. Darüber hinaus haben mehrere Anwaltskanzleien Ermittlungen gegen Wealthfront Corporation wegen potenzieller Versters gegen die Bundeswertpapiergesetze eingeleitet. Die Ermittlungen konzentrieren sich auf die Bewegungen von Kundenvermögen und möglich Interessenkonflikt im Zusammenhang mit dem Immobilienkreditgeschäft. Die einmalige actionbasierte Vergütung, die des Unternehmen für das vierte Quartal angekündigt hat, wird voraussichtlich auf das Auszugseingabeergebnis auswirken und könnte den Kurs weiter beeinflussen. Insgesamt haben dies Ereignis dazu beigetragen, dass der Aktienkurs von Wealthfront Corp. Über 33,73% gesunken ist. The primary drivers of revenue growth for a company are largely attributed to two key areas: cash management revenue and investment advisory revenue. These sources have been consistently mentioned as significant contributors to revenue growth across various pages in the summaries. On the other hand, the primary drivers of revenue decline include other revenue, changes in client investment behaviors on the platform, global macroeconomic environment, geopolitical instability and uncertainty, and weak economic conditions. These factors have been identified as major contributors to revenue decline. Additionally, specific drivers of revenue growth or decline mentioned in the summaries highlight the importance of new cash management clients, scalability of the platform, client satisfaction, changes in regulatory treatment of cash sweep programs, and termination or non-renewal of agreements with banking partners. The net income and profit margins of a company have experienced a significant decline over the past year. In Q3 2025, the net income decreased by $70.8 million compared to the same period in 2024, resulting in a net income of $30,901. This downward trend is also evident in the year-to-date YTD figures, with a net income of $91,589 in 2025, down from $162,355 in 2024. The profit margins have also taken a hit, with the net income margin decreasing by 38.1% for the 9 months ended October 31, 2025. Specifically, the net income margin dropped to 33.2% in Q3 2025, down from 37.4% in Q3 2024, and to 34.1% YTD 2025, down from 72% in YTD 2024. The reasons behind this decline are attributed to an increase in the provision for income taxes, which rose from -$54,582 in 2024 to $17,138 in 2025. Additionally, non-cash adjustments increased from $58.9 million in 2024 to $35 million in 2025. These factors have collectively contributed to the decline in net income and profit margins, indicating a challenging period for the company's financial performance. The company is generating positive operating cash flow, indicating a strong financial position. The data from page 16 and page 56 of the report confirm this trend. In 2025, the net cash provided by operating activities was $118,883, which is an increase from the previous year's figure of $103,235 in 2024. This significant jump suggests that the company's operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow. The company's debt level has undergone significant changes over the past period. Initially, it increased from $192,670 to $458,084, indicating a substantial rise in debt. Furthermore, an amended revolver was introduced, allowing for up to $250 million in borrowing capacity, including a subfacility of up to $25 million for letters of credit. Additionally, total future minimum lease payments for operating leases increased from $0 to $12.2 million. In contrast, the company's interest expenses have seen a notable decline. For the 3 and 9 months ended October 31, 2025, interest expense decreased by 79% and 85%, respectively. This significant reduction in interest expenses suggests that the company has made efforts to manage its debt effectively and reduce its financial burden. Overall, these changes indicate a shift towards more manageable debt levels and reduced financial obligations for the company. The recent performance of various segments and regions has been a mixed bag. Unfortunately, several areas have underperformed. International entities, offices, and operations abroad have struggled, indicating challenges in these markets. Local markets have also failed to meet expectations, suggesting difficulties in adapting to changing consumer preferences. On the other hand, one segment stands out as a bright spot. The United States market has performed exceptionally well, demonstrating resilience and adaptability in the current economic climate. This success can be attributed to various factors, including strong demand, effective marketing strategies, and a favorable business environment. Management is expressing caution about several key areas that could impact the company's outlook. They are concerned about regulatory changes that may increase scrutiny and enforcement actions, which could lead to fines and penalties. Additionally, they highlight the high costs and complexity of complying with laws and regulations, diverting management's attention from other business concerns. The company is also focused on protecting its intellectual property rights, as potential litigation costs and competitive disadvantages are a concern. Furthermore, management notes that the expiration of net operating losses, NOL, and research and development credits could result in increased tax liability, negatively impacting the business. In terms of financial performance, management reports meeting revenue and operating profit targets, but also highlights the importance of maintaining minimum tangible net worth, liquidity, and consolidated fixed charge coverage ratio. They also emphasize that they do not intend to pay dividends in the foreseeable future, instead choosing to retain all available funds for business operations. Overall, management is prioritizing risk mitigation and financial stability, while also focusing on meeting revenue and operating profit targets. The company has demonstrated its commitment to shareholder value by implementing two significant initiatives. Firstly, in March 2024, the company paid off a convertible note, utilizing this opportunity to purchase additional shares of Series H-1 and H-2. This strategic move not only strengthened the company's equity, but also provided a clear indication of its financial stability. In addition to acquiring new shares, the company has also taken steps to optimize its capital structure through share buybacks. As of January 31, 2025, the company had repurchased 1,519,220 shares via early exercise of unvested options. This deliberate effort to reduce outstanding shares has contributed to a more streamlined and efficient capital base, ultimately benefiting shareholders. The company's operations are vulnerable to potential disruptions in its supply chain. One of the main concerns is interruptions or delays from third-party service providers, which could impair the delivery of its platform, products, and services. Furthermore, these third-party providers may be susceptible to various risks such as cyberattacks, natural disasters, and power losses that could lead to supply chain disruptions. Fortunately, there are no concerns about inventory buildup, indicating that the company's stock levels are well managed and not a cause for worry. However, the potential for supply chain disruption remains a pressing issue that needs to be addressed to ensure the smooth delivery of its products and services. That concludes the financial summary for Wealthfront Corporation. Feel free to comment below, and I will be happy to answer them when possible.